Hello viewers, welcome to my channel. I am Hasham. Last video, two problems I have completed on computing the income from house property. Now in this video, third and fourth problem I am going to explain. So comparatively, it's very easy to compute the income from house property compared to computing income from salary. So this chapter is easily to understand. So provisions are also very few. So before starting the problem, you must be thorough about the theory. Two videos I have uploaded on theory. So if you have not watched, I suggest you go to the playlist of my channel. Select the subject income tax assessment year 23-24. Watch the first two videos. Be clear about the concept of income from house property. Then you can understand. Now every problem will come across 2-3 new points. So focus on those 2-3 new points. Remaining points are same. So before starting the problems, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the points which I have written on the board. Then I'll explain every point in detail. Now, see the problem number three. Sri Sunil Kumar, a senior citizen, owns a house in Chennai. It has been let out on a monthly rent of 10,500 and 2,000 per month towards service charges. So here the owner has let out his property on rent, the monthly rent 10,500. But apart from that, the owner is charging 2,000 rupees as service charges. Then municipal rental value, MRV is 7,500 per month and rent of similar building is 10,000 per month. Similar building means fair rental value. So MRV is 7,500 per month and FRV is 10,000 per month. Standard rent 8,400 per month. That means the house is governed by Rent Control Act. So standard rent is also given. So we have to calculate adjusted ERV in this problem. The owner incurs the following expenses: local taxes, means municipal taxes, and lift maintenance 6,200, water charges 2,000. That means the owner is providing the service. This lift maintenance is 6,200 and water charges 2,000. Now in this case, what will happen is the owner is charging 2,000 rupees per month from the tenant for service providing, and the services provided are lift maintenance and water charges. So Income Tax Act says when the owner is charging some extra charges apart from rent and offering some extra services, then the income from these extra services is chargeable to tax under income from other sources. So here 2,000 rupees per month is charged towards service charges. So 2,000 per month into 12, 24,000. From that 24,000, the services given, municipal tax is 6,200 and water charges 2,000. Total 8,200. So from 24,000 deduct 8,200. The remaining is taxable under income from other sources. Repair, ignore. Interest paid on loan taken to construct the house 9,600, including the penal interest 1,000. That means the interest is not paid on time. That's why the lender has charged interest, penal interest. Penal interest, Income Tax Act says penal interest is not allowed as deduction, whereas interest on loan is allowed. So out of 9,600, 1,000 is not allowed. Only 8,600 is allowed under section 24B. Compute the income from house property. So as usual, Sri Sunil Kumar, computation of income from house property for the estimated 23-24 gross annual value. So first of all, remember the format. First we take the gross annual value that we have to calculate in working notes minus municipal taxes. If the local taxes or municipal taxes are paid by the owner, it will be allowed. So next, annual value. Deductions under section 24, 24A, 24B. 24A is the standard deduction, compulsory deduction, 30% of NAV, and interest on loan. This is the format. Now in working note, we calculate the gross annual value. Calculation of GAV. First, we need to calculate ERV, expected rental value, which is higher of the following two amounts, MRV, FRV. In the problem, MRV is given 7,500 per month into 12, it comes to 90,000. Then FRV is 10,000 per month into 12, 1,20,000. So whichever is higher, 90 or 120, 1,20,000 is higher, that is the ERV. The next step, adjusted ERV we need to calculate because the house is governed by Rent Control Act. Standard rent is given. If standard rent is not given, no need to calculate adjusted ERV. Now, adjusted ERV is lower of the following. ERV, already we have calculated 1,20,000. And SRV, standard rental value, is given in the problem 8,400 per month into 12. 1,08,000. Whichever is lower, ERV or SRV, whichever is lower, that is the adjusted ERV. So adjusted ERV we got 1,08,000. Now ARV, annual rental value. The house is given on rent for 10,500 per month. We have excluded service charges. Remember, service charges are separately taxable under income from other sources. So 10,500 into 12, 1,26,000. Lastly, GAV is higher of the following two amounts, adjusted ERV or ARV. Remember, while watching the video, always keep a notebook, calculator, pen ready. Whenever I explain some important provisions, note it down. Then only you can be able to remember. Otherwise, you'll forget it. So many provisions are there. Always maintain a running notes. Now, GAV is higher of the following. Adjusted ERV we got 1,08,000 and ARV we got 1,26,000. Whichever is higher. So 1,26,000 is higher. That is the gross annual value. Now, local taxes paid. It is given in the problem 12,960. You can check local taxes 12,960. Deduct local taxes, will get net annual value NAV 1,13,040. Standard deduction is 30% NAV always. It will not be given in the problem, but you have to provide it as per the provisions of Income Tax Act. So 30% of 1,13,040, 33,912. Interest on loan taken is given 9,600. But in that 9,600, 1,000 is penal interest, not allowed. Only 8,600 allowed. Add up, we'll get 42,512. Now deduct 1,13,040 minus 42,512, you will get 70,528. This is the income from house property. In working note, you should write down. In the normal situation, the cost of facilities provided should be deducted from rent received while calculating ERV. Normal situation, if services are given, charges are made by the employer, by the owner of the house, then the services given will be deducted from ARV. But here, the services are given along with the expenditure incurred on lift maintenance and water charges. Water charges are given. So lift maintenance and water charges are the facilities given. For that purpose, he is charging 2,000. So, but in this case, assessee is collecting service charges and expenses are deducted from the service charges received under the head income from other sources. Just now I told you, penal interest is not allowed as deduction. Now service charges, how it is taxable? Under income from other sources. Service charges 2,000 per month into 12, 24,000. Now facilities, services given are lift maintenance and water charges. These two are the services. Add up. Then 15,800 is the income from other sources. It is taxable under income from other sources. That's all. Now I am starting problem number 4. From the particulars given below, compute the income from house property for the current assessment year of Srimati Manisha. Again, first of all, draw the format. Srimati Manisha, computation of income from house property for the assessment year. Gross annual value, municipal taxes, NAV, deductions under section 24. Draw the complete format. In working note, we have to calculate the GAV and other items. Now, municipal value 40,000, MRV 40,000. Rent received 55,000, due is 5,000. That means total rent of the year is 60,000. 55,000 received and 5,000 outstanding. Income Tax Act says while taking ARV, add the outstanding rent. The rent received 55,000 plus rent outstanding 5,000, so ARV will be 60,000. Then date of completion of construction 31st August 2022, and actually our previous year is 22-23 and the assessment year is 23-24. So during the current previous year, the house construction was completed. Land revenue 600, ignore. Repairs, land revenue, collection charges, ground rent, these are not allowed as deduction. In examination, in working note, you should write down. Then land revenue, municipal taxes 10%. 10% of MRV, municipal rental value. Fair rent 72,000. Let out, nature of use is let out for commercial purpose. Whether it is let out for a residential purpose or let out for commercial purpose, no difference at all. Repairs 2,000, ignore. Ground rent 400, ignore. Cost of facilities provided to the tenant 4,600. Now see here, previous problem and this problem, there is a difference. The employer, the owner is not charging any service charges from the tenant, but the owner is providing some facilities to the tenant. Income Tax Act says any facilities given by the owner and cost incurred on those facilities will be deducted from ARV. So in this problem, ARV is equal to rent received 55,000 plus rent outstanding 5,000, 60,000. From 60,000, cost of facilities provided by the owner. This cost of facilities are 4,600. This will be deducted. Then only we'll get ARV. Previous problem, the owner has specifically charged some service charges. But in this problem, the owner has not charged any service charges. Directly providing the services. In cost incurred, it will be deducted. Municipal taxes and repair expenses are paid by tenant. This is the new point. Income Tax Act says municipal taxes will be allowed as deduction only if it is paid by the owner. If the agreement says that municipal taxes are paid by the tenant, it will not be allowed. So this is the first problem where municipal taxes are required to be paid by the tenant. So Income Tax Act says not deduction. No deduction. Municipal taxes nil. Repairs, whether it is paid by owner or whether it is paid by the tenant, ignored. Should not be considered. Then the house is constructed by taking a loan of 5 lakh rupees at 15% on 1st 11/2020, and no amount of principal is repaid so far. Interest is paid as and when it is due. One new point. Income Tax Act says interest on loan for the current previous year is fully allowed as deduction. Whether paid or not, interest on loan is fully allowed. So 5 lakh into 15%. Before that, first of all, we'll calculate the GAV, gross annual value. The calculation of GAV, first we calculate ERV. ERV is higher of the following two: MRV, FRV. Every time we are calculating MRV 40,000, FRV 72,000. Whichever is higher, 72,000 is the ERV. Second step, ERV. We are not calculating adjusted ERV because SRV is not given. The house is not governed by Rent Control Act. Now, ARV, actual rent received plus rent outstanding minus cost of facility provided. Just now I told you 55,000 plus 5,000 minus 4,600, 55,400 is the ARV. Now GAV is higher of the following two: ERV or ARV. ERV is 72,000, ARV is 55,400. Whichever is higher, 72,000 is higher. That is the GAV. From GAV, less municipal taxes, no deduction, zero, nil. So 72,000 is the NAV, net annual value. Standard deduction under section 24A, 30% of 72,000, 21,600. Now interest on loan. This is the complicated part. Interest on loan. Current year interest on loan, whether paid or not, fully allowed as deduction. How much loan? 5 lakh. Rate of interest 15%. So current year's full interest on loan is allowed. 5 lakh into 15%, 75,000 current year interest loan. One more provision is given. If a loan is taken for construction and any interest on loan is paid before completion of construction, that is called prior period interest. Actually, loan was taken in 1st November 2020, but the construction was completed on 31st August 2022. So during this before construction period, interest is paid. Income Tax Act says that prior period interest will be allowed as deduction in 5 annual equal installments. 5 annual equal installments. So we need to calculate how much was the interest before completion of construction. Before completion of construction. Actually, date of construction completion is 31st August, but we will not calculate for the current assessment year, for current previous year. For current previous year, complete 75,000 is allowed. We have to calculate up to the end of the previous year. Up to the end of the previous year means 31st March 2022. So we need to calculate interest up to 31st March 2022. Now, prior period interest on loan is allowed in 5 annual equal installments. That is the provision of Income Tax Act. Now, loan taken on 1st November 2020 and the interest from 1st 11/2020 to 31st March 2021. Every year the accounts are closed. The financial year end on 31st March. Loan taken 1st November 2020 and year ends on 31st March 2021. So how many months? November, December, January, February, March. 5 months. So we need to calculate the interest for 5 months. So 5 lakh into 15% into 5 by 12, 31,250. This is the interest up to 31st March 2021. Now next year will end on 31st March 2022. Now interest from 1st April 2021 to 31st March 2022. Full year interest. So 5 lakh into 15%. Full year interest. 75,000. So take the total. 1,06,250 is the total interest prior to the date of construction. Remember, date of construction is 31st August, but we should not calculate up to 31st August. We should calculate 31st March before this date of construction. 31st March before the date of construction. So up to 31st March 2022, we need the interest. So total prior period interest on loan is 1,06,250. This 1,06,250 is deductible in 5 annual equal installments. So 1/5 is allowed. So 1,06,250 into 1 by 5, it comes to 21,250. This is the prior period interest allowed during the current year. In the same way, every year 21,250 every year. For how many years? 5 years. Now current year's interest. Current year interest already we have calculated 75,000. So current year interest 75,000. Prior period interest 21,250. Total interest is 96,250 allowed as deduction. So interest on loan 96,250. Now take the total of these two amounts, 1,17,850. Now deduct 72,000 minus 1,17,850. Deduction is more, so you are getting negative figure. Minus 45,850. This minus 45,850 is the loss from house property, not profit. There is no income. There is a loss from house property, 45,850. That's all. So in this video, I have explained you two problems, problem number 3 and problem number 4. So if you want the perfect command on these problems, watch the video twice, thrice. Maintain notes, recording all the provisions which I am explaining